Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, the 29th of March, 2023, just after 6 p.m. Central Time. Well, we're through with the bank hearings in front of Congress. I learned a heck of a lot. One of the things you have to pay attention to is how the banks, as they buy government securities, label them on their books. Are they labeled held to maturity or hold to sell? If they're hold to sell, they have to be marked to the market. If they're marked to maturity, they're held with no hit on the face value. Okay. The problem is that's not real world. Why? Because if the bank has happened what just happened, those hold to maturity have to be sold at the market value. It changes the whole capital structure of the bank, because now what takes place is they're selling them. They got to take the hit to the real market value. They sell them. They go out like SVB did. And where do you get the capital? They said they got to raise stock. There's a flaw. It's right in front of us. That's the flaw. I don't have the solution for it, but I understand what happened in the issue in the most simple of terms, and that's the good news. I could care less why everybody ran to the bank and took their money. This is a situation that can happen over and over again for a myriad of reasons, unless we find a way to get the banks where they, if they have to hold to maturity, what do? I mean, the real world is you can say, oh, that's what I intend on doing, but now you got to sell it. And let's assume it's a 20% drop in face value. I'm just making this up, but I'm giving you an example. Where do you make up the capital? How do you do that? That's the problem that we're facing. The second thing is under Dodd-Frank, another thing I learned, the FDIC has phenomenal latitude in how it charges its members. They've lost about, they're estimating, $23 billion on this banking fiasco. They have to replenish it. May is when they're going to announce the formula. I didn't realize they can go out and charge the big banks one way. They can charge the small banks another or not charge them at all. They decide. They play King Solomon. Who's going to pay? Who isn't? What's your rate? What's it going to be? That's coming. So for sure, the big four are going to pay a lot more money than they think. They better take some provisions for that because that's coming. The last part that we look at is we've had this phenomenal rally going on in stocks because we think the other shoes aren't going to drop. I'm in that camp too. Until they drop, they haven't dropped. I know what I think is the next shoe. How bad it'll be, I don't know. And I think it's commercial loans for the reasons I've espoused here over and over. That guy's going to go to his banker, and his banker's going to be now very tight-lipped, and he's not going to want to let money out. And that's going to last, I think, another year minimum. And as we get into that period, does that create a problem, and where are you? I am really happy with what I heard in my city of Chicago. 3 large office buildings, the BC categories that I tell you about, are getting nearly $1 billion from the city to convert into housing in the Loop, right on LaSalle Street and right in that area. That is phenomenal news. It hasn't gone through completely yet. They're in the final numbers. But you see, what that does is it revitalizes. This is where good money has to be spent. People come in there, it brings in restaurants, it brings in, how are they going to get food shipped to their house? Are they going to get grocery stores down there? You repurpose these areas that the pandemic has literally changed in many cities forever. I'm very pro that. When I look at the S&P, we have climbed back over that line that I told you. Do you remember I've been pointing this out to you for a couple of days? Let me see if I can get this to come there. The settlement on this right here was the key to me, 40.53. Well, with tonight's close, you'll say, well, Ira, here we are at 40.56. I agree with you, but it's Thursday's trade. We're not at the settlement on Friday. You could be down. I don't know. If it stays like this, then that part of the break is ended. If it doesn't, and it's anything under that, that part of the break is still underway. At this moment, the bias has shifted to the upside as long as you stay over 39.92. When we come to the charts here, you can see the action. With the current action, you have higher lows, and now you can move that arrow even here. You got higher lows, higher highs. It would do the same there. You're back in your uptrend. Today's action, and I'll take you back here. This is so important. Today's action broke the pattern of lower highs, higher lows. You do see that. So you're bullish again. You've joined into the bull camp one more time. You've cleared these moving averages where I told you early on they should have resistance against. That opens up the move to what number? The upper Bollinger Band at the 40, 80 and a fraction level. If the market wants to pop, that is the next upside target here. And in momentum, you're overbought. So getting up there, if it can reach it, I think the professional money will dump in a big way because you're not embedded. When we look at the NASDAQ, you're trying to get both numbers over 80 tonight. Now, were they like this on the close? They were. So day one is Wednesday's close. Day two is right now. The NASDAQ is where suddenly, all of a sudden, people think the tech stocks are going to lead us out of this. I don't know if they're right or wrong. For it to work, here's what I know. The bet has to be that interest rates are close to or have peaked. It's got to be one of the two. The enemy of tech stocks is high interest rates. If interest rates are peaking, that's it. I am still in the camp that the Fed is not through. I will change like that. I will be a turncoat so fast you won't know it if we get a good wobble for a couple of reports in labor. Tomorrow we get our first unemployment claims. We'll see what they do. By the way, Fed Chair Powell was asked where he thinks interest rates are going this week. I don't know if you read that. It was very small in a blurb. And he answered to Congress, well, you saw what the dot plot is saying. He said that's as good an answer as I can give you as any, which is at least one more rate hike in May. So right around the corner. Okay. As you look at the Dow, resistance is going to meet it head on. The Bollinger Band is coming crashing down in an overbought market. If they meet, that's where I think the pros run, which is 33,167. In the Russell, you're at the resistance. I pointed out to you yesterday and the day before, you have an oversold market. If it's going to correct that and not embed, you typically go to the 18-day average. You're there. Now you're neutral. You're waiting to see the next element. In the bond market, you finally fell back. Remember I said, as interest rates are climbing, futures drop. They're an inversion market. So now you're back into the first support zone, the 18-day average of closes. Now under that's the 100. The trend is down. The number is 129.29. If you're under that, you have a bearish bias. So if it closes like that, you have the trend down, the bias down. It's a large risk back up there. It's $4,000 almost, but that doesn't matter, right? In the 5-year note, not quite down into the support, but I think it's headed there. You have a higher high, lower low, an untradeable situation. This ended the banking fear. So the hot money that ran into the safe haven of the bonds and notes via the money market funds and all that, pulling itself out, and where it moves is anybody's guess. In the dollar index, you are still oversold. You either decide to embed putting both of these numbers underneath 20, or you get a correction where they lift away and then you go back to the 18-day average. I'll flip a coin here. It can go either darn way on it. In the eurocurrency, we have higher lows, higher highs, bullish still. British pound, you have the embedded rating. Until you lose with the red line under 79, I think this market still has upside bias. I've been telling that to my clientele, my morning people that I asked to join me. Before I finish up here, I'm going to remind you, I want that thumb up if you like what I'm doing here. I do this for free for you. That helps me with everything I've got. And I'm going to say it again. I so wish you would join me in the morning when I put out, and today recorded at 5:15, my morning commentaries. I mean, I think you'll see that I've picked up everything that's going on in Asia, Europe, where we're at in America, and I'm giving you all kinds of trade ideas. And I am saying, I want you to buy here. I want you to sell there. Here's your stop order. I'll flip back and forth between daily and weekly charts. At times I'll bring in price count information. There's a lot that I bring to the table for you. Bitcoin still has a bullish embedded reading. That's bullish. Until the red line's under 79, these pullbacks get bought, and the trade keeps looking to see a combination of the Bollinger Band, and there's a thing called a window envelope that I show in my morning videos when the ones I want you to join me in. It looks to me like you're trying to make a bottom Haven't done it yet, trying to make a bottom here in the 535, 545 area of the difference between Brent and WTI oil. You can see how you rallied up and you're having trouble on the first challenge of the 18-day average. This is right in my charting course, classic. And you'll probably pull back to that in the WTI. It wouldn't surprise me. But this bear market move is over. So why? Because the market is counting that China's coming alive. The market is counting now that the banking crisis ended. And think about this break and think about this right here. That's when it ended. And now the market came alive. That pressure's off the market. It doesn't think the world's going into a banking meltdown. In gasoline, you know I'm bullish. I'm looking for a pullback here. I'm looking for a way desperately to get my clients long in this market. And in nat gas, you're embedded, you're bearish. This is the time of year where you just keep building stocks. I see nothing that's very friendly for that market. Now, if you don't have our futures trading kit, I'd love for you to get it because we've put in one area everything for you. Our charts, different pamphlets that I think you'll love. It's 10 chapters that explain first the concept of trading for newcomers. The other guys don't need that. But you should move on to our other tools, like you'll see all this. And what that's going to be is my reports. Yes, you can get my access to my information, my morning videos where you join in. I created this cause and effect under Paul Volcker. It's as timely today as it was then. It's about M1, M2, M3, velocity of money. My courses on pivot points, which are free, and my Aruna indicator are in here. The 14 top chart patterns that I look at. I link you right into the Chicago Mercantile Exchange, all their trade courses. As they bring on new ones, your link will take you right to everything that they've got there. It's a phenomenal kit, including our charting software. So if you like to get it, it's simple. Go to our website under free offer or just move up here, click on the icon, and away you go. I'm Ira Epstein. You have yourself a great evening. I will see you first thing in the morning. Take care.